You ever get that little nagging feeling that your company's financial numbers just aren't quite right? Well, today, we're going to put that uncertainty to rest. We are diving into the 8 essential types of financial reconciliation, the absolute keys to your business's financial health.
So let me ask you straight up, are your financial records telling the whole story? Because for a lot of businesses, there's this weird, mysterious gap between the numbers you think you have and what's actually in the bank. And we're here to solve that mystery.
Yep, that gap is exactly what we're here to tackle. But look, this isn't just about balancing the books. Think of it more like a quest for financial truth, making sure that every single dollar is accounted for right where it should be.
So, what even is financial reconciliation when you get right down to it? It's pretty simple, actually. It's the critical process of taking two sets of records and comparing them to make sure they match perfectly. The goal isn't just to be close enough, it's to be identical. It's basically the ultimate fact check for your company's money.
Now, the 8 types we're going to cover today, they fall really neatly into 2 main buckets. On one side, you've got checks that compare your books to the outside world, banks, vendors, that sort of thing. And on the other side, you've got checks that are all about getting your own internal house in order, stuff like your assets and inventory. Let's kick things off with those external checks. So this first group is all about validation, right? It's how you prove that what you have written down internally actually reflects what happened out there in the real world with other people and other companies. First up, the big one, the most fundamental check of all, bank reconciliation. This is where you take your company's cash records and put them side by side with your bank statements. You're basically hunting for any differences, no matter how small. Things like checks that haven't been cashed yet or those sneaky bank fees. This way, you know your true cash position.
Next, we've got intercompany reconciliation. Now, this one is absolutely crucial for any business that's a bit larger. If you have different branches or divisions, this process makes sure that any transactions between them are perfectly aligned. So, say your manufacturing division sells parts to your retail division. Well, this check makes sure that transaction is recorded correctly on both sets of books, so the parent company doesn't end up accidentally counting the same money twice. Whoops!
Okay, let's talk about vendor reconciliation. This is all about the money going out. You're meticulously matching your accounts payable, that's the money you owe, against the actual invoices sent by your suppliers. This is such a vital step to catch mistakes, stop yourself from overpaying, and just build solid, trusting relationships with the partners that help keep your business running.
And on the flip side, of course, we have customer reconciliation. Here, you're verifying your accounts receivable, the money that customers owe you. You're making sure that your records of what they owe line up with what they think they owe. And trust me, catching any differences here early means you get paid faster and you keep your customers happy. It's a win-win.
All right, so we've double-checked our numbers against the outside world. Now it's time to look inward. This next set of reconciliations is all about making sure our own internal records, our own house, is completely in order.
This brings us to the master checklist of them all. General ledger reconciliation. Your general ledger is kind of like the central nervous system for all your company's financial data. So reconciling it means going through all the accounts, system by system, correcting errors, making adjustments, and making sure your final financial reports are absolutely precise.
Now, for something a little more tangible, inventory reconciliation. This is where the physical world literally meets your financial records. We're talking about counting your actual physical stock and comparing it to what the spreadsheets say you have. This is so essential for valuing your assets correctly and, just as important, for spotting problems like theft or damage.
And it's a very similar idea for fixed asset reconciliation. This is for your big-ticket, long-term items, things like buildings, company cars, or heavy equipment. You have to accurately track their value as it changes over time, through depreciation. This makes sure your balance sheet isn't lying about what those major assets are truly worth today.
And finally, we've got a reconciliation that literally everyone has to think about. Tax reconciliation. This is all about making sure the financial data you use to run your business lines up perfectly with the figures you report to the tax authorities. It is an absolutely essential step for staying compliant and making sure you've paid exactly the right amount of tax. No more, no less.
So we've just walked through 8 very distinct processes. But it's so important to see them not just as a bunch of separate tasks on a to-do list, but as one interconnected system. A system that's designed to build and maintain trust in your numbers.
And right here, you can see how it all clicks together. From your bank statements all the way to your tax returns. Every single one of these 8 checks is working toward one goal:
achieving complete financial integrity. It's a system where every part supports the whole, creating this rock-solid financial foundation for your entire business.
And that leaves us with one final thought. As you look at this whole system, think about your own business, or even just your own personal finances. Which one of these essential checks could you start doing, or maybe just do a little bit better right now to bring more clarity and more strength to your finances?